If you're starting a business this year and nobody's explained to you payroll, taxes, and entity timing, you could cost yourself tens of thousands of dollars before you even know what happened. I've been doing this for almost 20 years. Let me show you what I see go wrong. Most people start a business emotionally. They go online, they set up their LLC, takes 15 minutes, and they think that's when the magic happens. The bottom line is an LLC is just paperwork. It's not a strategy. It's not going to magically save you money in taxes. You have to do things a certain way in order for it to work the way you're hoping that it's going to. Here's the deal. An LLC is just asset protection. There's no specific LLC tax form. An LLC can be treated several different ways. By default, most people, when they start a business, should just file it as a disregarded entity. That means you're just filing it on your personal return on a Schedule C, or if you're a real estate investor, it'd be on Schedule E. Where most people think they're going to save all this money in taxes doesn't happen until you elect to be an S-Corp. We'll get more into that later. Listen, I'm not saying not to set up an LLC. In fact, an LLC gives you very important liability protection. That's the point of it. It's not a tax strategy. But where most taxpayers trip up is that they treat their LLC just like a personal savings account. They use it for personal expenses. They aren't really strict about the money going in or out of that account. Well, if you do it that way, that LLC doesn't have any value at all. In fact, if you get sued and the person suing you can prove that you didn't treat it as a separate entity, meaning you commingled funds, a judge will pierce the corporate veil, which means there was no point in having that LLC to begin with. Everyone on social media says that you need to set the S-Corp up right away. That's just not the case. Setting up an S-Corp is going to make things more complicated for you and your business and more expensive when it comes time for taxes. You have to go on payroll. There's a lot more to it. And the fact is, if your profit is less than $50,000, $60,000 a year, it really doesn't justify it. Here's the deal. The reason why you do a subchapter S corporation is because as an S-Corp, your profits aren't subject to self-employment tax. That's 15.3%. It can become very expensive. But self-employment tax, what it is it's your Social Security and Medicare. You pay that as self-employment tax whenever it's a disregarded entity on Schedule C of your tax return. But an S-Corp, they don't have to pay it. But because of that, the IRS says that you have to go on payroll for a reasonable salary. What's reasonable? Well, that's for you to figure out. The reason why it may not be a great idea to be an S-Corp right out of the gate is because as a subchapter S corporation, there's an additional tax return for you to file for the corporation. It is typically much more expensive to file an S-Corp return with a tax preparer than it is just a simple, basic individual return with a Schedule C. In addition to that, being that you have to go on payroll, now you're going to have payroll processing fees. And then on top of that, depending on your state, you may have to pay for unemployment tax and other various taxes that you wouldn't necessarily have to pay if you weren't on payroll. Here in Pennsylvania, where I'm from and my firm is, we typically suggest that once you hit $50,000, $60,000 a year in profit, then it's time to start considering filing the paperwork to become an S-Corp. That's the break-even point. By the time you pay for the corporate return, payroll processing, the additional taxes, typically at that profit level, that's when it's time to start having that discussion. Being an S-Corp can save you tens of thousands of dollars a year in taxes, maybe more. And it's a really good strategy if it's necessary for your business. Just because you have an LLC does not mean that you need to be an S-Corp. However, as just an LLC, there is no tax benefit over and above what it would be if you were just a sole proprietor. It's taxed the same way. The moment you decide to elect to be an S-Corp, that means it's time for payroll. It's not optional. It's mandatory. The whole purpose of that S-Corp is to save money in self-employment tax. Well, the IRS says that if you're not going to pay self-employment tax on your earnings, on your profits, then you have to be on payroll for a reasonable salary. Well, what's reasonable? Yeah, they don't tell you that. You should know what is a reasonable salary. For instance, if you're a CPA and you've been doing this for 20 years, A $40,000 a year salary probably isn't reasonable. But setting up payroll is not all bad. Yes, you have to pay a payroll processing company to process the payroll, and there are taxes that are going to be due because you're on payroll. But you can use that to your advantage. A lot of my clients will up their federal withholding on their payroll so that they don't have to send in estimated payments. And the Social Security and Medicare that you're paying in now do go into your fund, and as long as Social Security and Medicare are still there when it's time for you to retire, that will be beneficial to you. But don't cheap out when it comes to payroll. Don't think, well, I'll just do it myself and I'll just keep the ledger and I'll pay the taxes myself. Payroll can be very complicated, and honestly, it's the biggest compliance risk that most businesses face. There are federal tax deposits, there are state tax deposits, there are quarterly filings. It's all very important, and mistakes can be extremely costly. So there are a lot of different payroll platforms out there for you to do it yourself. You can certainly use one of those or find a payroll company that can help you. But going on payroll is important, and you need to do it. If you're a subchapter S corporation, that means that the officers need to be on payroll. In fact, on an S-Corp tax return, there is a specific line item for officer salaries. The IRS calls it out for a reason. They want to make sure that you're taking payroll. It's important. Now, each state may be different, but here in Pennsylvania, workman's compensation insurance is not required for officers of the company. Meaning, if you have other employees, it is absolutely required that you have workers' compensation for those employees in case somebody gets hurt. However, you can exempt yourself as an officer. So if you decide to pay yourself a $100,000 a year salary, that doesn't necessarily mean that your workers' comp is going to go up in cost. So talk to your insurance company and make sure and let them know that you're an officer and that you don't want workman's compensation. Now, with that being said, you may want that. If your business is roofing or some sort of contracting or something that may be demanding or you may get hurt on the job, you are permitted to have workers' compensation insurance on yourself. And if you do get hurt, they'll pay out. So take that into consideration too. It may be worth the expense to have that. Here are some of the things that I see all the time, the biggest mistakes I see business owners making. First and foremost, mixing personal and business expenses. If you do that, you might as well throw your LLC right in the trash. Because if you end up in court because somebody decided to sue you, a judge is going to pierce the corporate veil. You cannot commingle funds. It is crucial that you don't do that. Not tracking mileage correctly. Business owners can track mileage for their personal vehicles if they're used for business. That means that trip was necessary for your business. Also, to and from your office or your primary workplace don't count. That's just part of your commute. So the mileage that you need to be tracking are the miles going to visit a client, taking somebody to dinner, going to pick up product, deliver a product that you sold. Those miles are deductible. No bookkeeping system. Keeping accurate books and understanding your numbers is so important if you're a business owner. If you don't know your numbers, you cannot succeed. And I'm not talking about, well, I know that there's X amount of dollars in my checking account, so I must be doing fine. That doesn't mean anything. Just because you've got $10,000 in your business account doesn't mean that tomorrow you're not going to get that bill from that vendor you forgot about and wipe it all out. Things happen, and you need to be prepared for it. You need to understand how your business is performing. You need to protect your funds. Not making estimated tax payments. The IRS and the state that you live in both require you to be paying taxes all year long. That doesn't mean at the end of the year, whenever you file your taxes, you make the big payment at the end. You will get penalized for that. There are specific rules on how much needs to be paid in per year. Talk to your tax preparer about it because it's very important that you're paying in quarterly, or if you're on payroll, you can elect to have more of a federal withholding out of that payroll in order to cover that tax liability. But you need to have a certain amount paid by the December 31st or else you will get penalized. And finally, waiting until year end to start strategizing. By that time, it's too late. And then even worse is coming to your tax preparer in February or March and saying, hey, what can we do to save some money in taxes? Nothing. The year's over. What do you mean? Your strategy with your tax preparer, your attorney, your accountant, your business coach, that needs to be an ongoing thing. You need to be learning and getting better every single day. And if you're not, your business is going to suffer for it. This is why it's important to develop those systems and processes and not to spend so much time working in your business, but working on your business. If I was starting over today, here's what I would do. Step one, you need to validate your revenue. Make sure that your business is going to actually make money, and then take that first step. Make sure it's a good idea. The second thing I would do is keep the structure simple. Don't listen to all these social media gurus that say that you need to have a trust and multiple LLCs and all this bullshit. It's probably not the case. Keep it simple. The simpler it is, the easier it will be for you to comply to what you need to do to protect yourself. If you have 3 LLCs that are all feeding each other revenue, it's going to be very easy for you to start commingling funds, which means if you end up in a courtroom, those LLCs don't help you. So keep it simple. Make sure that you understand the structure of your business and stick with those rules. No personal expenses go out of that LLC, and all revenue earned by the LLC has to be deposited into it. If a client writes that check out to your name personally, give it back and tell them to rewrite it to the LLC. It has to go into the business account. But that also means you're not going to take your LLC debit card to the grocery store and buy groceries. You're not going to pay your household utilities. Your personal expenses have to stay separate. You can use the money from your payroll for those personal expenses, or you can take a distribution. If it's a disregarded entity, you don't need to be on payroll, so you just take a distribution, but record it as such in your books. You have to show that you took a draw from the company. It is your money. You're allowed to take it. It just has to be accounted for correctly. Don't use that money directly for personal expenses. Make sure you write yourself a check or transfer that money into your personal account as a draw, and then use that money to pay your personal bills. Track everything from day one. Your bookkeeping is crucial. So many businesses fail because they don't keep track of the numbers. If you don't know your numbers, you'll never succeed. Make sure you're tracking all the money in and all the money out right from the day one perfectly. It's important. And while your business is small, now's the time to set those systems up correctly so that whenever it scales and it's bigger, it doesn't become a cluster trying to get it organized. Start correctly at the beginning. It'll make it a lot easier whenever you grow. Only do the S-Corp election when it is necessary. Too many people want to do it right out of the gate, and all you're doing is costing yourself more money. You don't need to be a subchapter S corporation if you're not making enough profit to justify it. Do the math, work with a professional that is honest with you, and then decide when it is necessary to file the S-Corp election paperwork. It doesn't have to happen right out of the gate, and don't listen to these social media influencers that try to say that you need to. Most of the time, you don't. And a lot of LLCs that we work with never hit the threshold. So be smart about it. Don't cost yourself more money for tax time. Don't put yourself on payroll if you don't need to. There are a lot of things that you need to accomplish before you file for an S-Corp election. And step 5 is to build your systems early. Businesses are only as strong as the systems and processes that you put in place. It is so, so important. You need to be able to scale. And if you don't have those systems set up early, you'll never be able to handle the business once you get to that point. It's crucial. Most businesses don't fail because the idea was bad. They do it because they don't have the system set up and they don't understand how it actually works. If you're going to build a business this year, build it correctly. And subscribe if you want real strategy, not just social media advice.